Hi everyone, in this video we'll be going over A-Level Accounting 2023 February-March paper 1-2. So this is a multiple choice paper which will consist of 30 questions and each of them will be of 1 mark. And the total time limit given for this paper is 1 hour, and in this video as well we'll be attempting to solve this paper under 1 hour. So without any further delay, let's get started. For the first question, why did Amitav prefer to form a partnership with Lenny rather than set up as a sole trader? Let's have a look at our options. For the first one, we're told that Amitav was certain they would work without disagreements. So it is not really possible to work without even one disagreement in partnership because Amitav and Lenny might have different opinions regarding different things. So there might be some sort of disagreements. So this is not true. The second one is Lenny had a different area of expertise to Amitav. So this might be true in case of partnership because when Amitav and Lenny will form a partnership, they both will give their input into the partnership. If Amitav has a different area of expertise compared to Lenny, then there might be additional benefit to the partnership itself because they both will be providing their input to the partnership. That results in higher efficiency of the business. So this is the correct one. Let's have a look at the remaining options as well. The financial statements of a partnership are not shared publicly. And so is the case for sole trader as well. So this is not really different to sole trader. This is incorrect. And the fourth one is that the legal requirements in setting up the business would be reduced. This is incorrect because the requirement for setting up a sole trader would be lower than that of partnership. That was the first question. Let's move towards the second one. A credit customer cleared her debt of 600 after deducting a cash discount of 12. How would the customer account appear in the books of the supplier after the payment has been recorded? So in the books of the supplier, a credit customer will be recorded in our sales ledger control account. So we have to consider recording this clearance of debt as well as the cash discount. So always remember that in our sales ledger control account, we record our credit sales on the debit side, right? And the settlement of credit sales will be recorded on the credit side. That is the clearance of debt itself. And 600 of debt was cleared after deducting a cash discount of 12. So the amount that the credit customer actually paid was 588. So 588 was received in our bank account, which should have been recorded on our credit side. So bank will record 588 and then discount allowed will also be recorded because the total debt was of 600, which was previously recorded on the debit side. And we need to settle this exact amount on the credit side itself. 588 was the amount that was actually paid and the 12 was the amount for discount. And this credit sales itself is our opening balance because the credit sales was already made. So our balance BD 600 will be recorded on our debit side and the settlement of it through our bank as well as the discount will be recorded on the credit side. And we can see that both of these are given in option A and B. Now we need to consider the discount because this is a credit customer we're talking about. The discount is the discount that we allowed, not received. So we're looking at discount allowed, which is given in option A. That's the correct answer. Let's move towards the third question. What is the advantage of keeping a full set of double entry books of accounts? Let's have a look at our options. The first one is account balances are available through the year. This is correct because if we keep full set of double entry books of accounts, then it just means that we record each transaction at the time that it occurs, which means that all of the balances will be updated through the year. So option A is the correct answer. Let's have a look at the remaining options as well. Business assets and owner's assets can be kept separate. So even if we do not maintain a full set of double entry books of accounts, we can actually maintain separate assets for business as well as owners. So this is incorrect. The third one is it enables the bookkeeper to check this bank statement for errors and omissions. So the bank statement can be checked for errors and omissions without having to keep a full set of double entry books of accounts. This is incorrect as well. Then the fourth one is that it stops the value of assets being overstated. This is incorrect. Even if we keep a full set of double entry books of accounts, some errors might occur which will result in overstatement of any sort of assets. Let's move towards the fourth question. At the start of a financial period, the owner's capital account of a business showed a balance of 85,000. So this is the starting balance, which is our opening balance. Then during the period, the owner introduced to the business a private vehicle worth 30,000. This is capital injection because new capital is being introduced. In addition, the owner made cash drawings of 15,000 and the business made a net loss for the period of 22,000. We need to figure out the balance on the capital account at the end of the period. Okay, we're talking about a sole trader because we're only given owner, not multiple partners. So we can just prepare the capital section from the statement of financial position. Start with the opening balance, which is given to be 85,000. Then we also know that there was capital injection, which means that the owner introduced additional amount into the business, which should be added to the opening balance. So there's capital injection or additional capital, which is given to be 30,000. Then we're given drawings. Always remember that drawings will be reduced from our opening balance. So we're just going to subtract our drawings, which is given to be 15,000. Then we have net loss. So if there was net profit, we would have added it to our opening balance. But since this is a net loss, we need to subtract it, which is given to be 22,000. Now we can just figure out the total, which will act as the balance on the capital account at the end of the period, which is our closing balance. So that is just 85,000 plus 30,000 minus 15,000 minus 22,000, which results in 78,000. And this amount is given in option C. That is the correct answer. Let's move towards the fifth question. A business has incorrectly recorded a vehicle purchase as a vehicle repair, and the business does not charge depreciation on assets in the year of purchase. So let's have our correct entry. So we're purchasing vehicle, which means that it should have been added to our assets, and we should have charged depreciation, but we're told that the business does not charge depreciation on assets in the year of purchase, which means that the only correct entry would have been to add the purchase of vehicle into our assets. Now the entry that we made was we entered it as vehicle repair, which means that vehicle repair comes as an overhead in our statement of profit or loss, right? So overhead in statement of profit or loss, and this will not be stated in our statement of financial position, right? For statement of profit or loss, we're talking in terms of profit. So if we have included overhead, it means that our profit will be reduced. So profit will be reduced, which means that profit will be understated. And the correct entry would have been to add it to assets, but we did not really add it while making this entry, which means that now assets will be understated as well. So profit understated is given in C and D, and asset understated is given in D, which means that D will be our correct answer. Let's move towards the next question. Non-current assets at the end of year 1 were recorded at cost 500,000 and carrying value of 360,000. During year 2, certain assets were sold. They had originally cost 100,000 and had been depreciated by 40,000. So the net book value of the asset that was sold is just cost, which was 100,000, minus the depreciation, which is 40,000, which gives our net book value to be 60,000. The depreciation charge for the remaining non-current assets in year 2 was 30,000. We're trying to figure out the carrying value of non-current assets at the end of year 2. So remember, I'm just going to write down the format for the schedule of non-current asset. We start with carrying value, opening balance. Then we subtract all of our disposal. And the disposal will be subtracted at its net book value or the carrying value. Then we'll add any sort of additions, which is the purchase of new non-current assets, and this should be recorded at cost. Then we subtract the depreciation charge for the year, which will finally give our carrying value closing balance. So in this case, we're trying to figure out the carrying value closing balance, which means that we first need to start with our opening balance, which is given to be 360,000. Then we're told that assets were sold. So this is disposal, and we've already figured out the net book value as well, which we need to subtract. We're not given any information regarding additions. And then the depreciation charge for the remaining non-current assets is given to be 30,000, which we need to subtract. All right. Now this gives the carrying value of non-current assets at the end of year 2, which is 360,000 minus 60,000 minus 30,000, which results in 270,000. And this amount is given in option A. That is the correct answer. Let's move towards the next question. The cost of repainting a property was debited to the property account. Which type of error was made? So this is repainting a property, which should have been treated as an overhead or revenue expense. But we debited it to the property account, which means that the entry was made as purchase of new property. This is actually a capital expense. So we've treated it correctly in terms of expenses, but instead of including it as our revenue expenses, we included it as our capital expense, which is the error of principle, and that is given in option D. Let's move towards the next question. A trial balance does not balance. The difference has been entered in a suspense account, and the following errors are found. Okay, we need to figure out the correcting debit entry to the suspense account. Let's look at the first error. A cash payment of 630 for rent has been credited in the cash book and debited to irrecoverable debts account. So rent is also an expense, which would have been credited, and irrecoverable debts is also an expense. So we just put the correct amount and treated it as an expense, but on a different heading, which means that this error will not be disclosed in our trial balance. So we do not really have to rectify this error, we can just skip it. Then the second one is that the provision for depreciation account has been overcast by 960. So in a trial balance, remember that debit side includes all of our assets and expense, whereas credit side includes all of our liability, capital, and income. And in this case, we're talking about provision for depreciation account. So remember that assets will be included at its net book value, right? And then the provision for depreciation account will be subtracted in order to calculate our net book value, because the formula is just cost minus provision for depreciation account. And provision for depreciation account had been overcast. So if we increase our provision for depreciation account, which is a negative value, then our net book value will be decreased. So we can just understand this second error as net book value being understated by 960, which means that we actually need to increase our net book value or the value of asset by 960. So in order to rectify this error, we just have to enter 960 into our debit account under the heading of that particular asset. And we're trying to figure out the entry in the suspense account. And always remember that the correction in the trial balance should be recorded on the opposite side in the suspense account. So this is suspense account. And if the correction of error 2 will have 960 on the debit side in trial balance, then in suspense account it will be on the credit side. Now for the third error, the purchases ledger control account balance of 48,300 had been included as a debit balance. But remember that purchases ledger control account will record all of our credit purchases, which results in liability or trade payables. And this amount of 48,300 should have actually been recorded on the credit side, because remember that all of our liabilities will be recorded on the credit side in our trial balance, but we had included it as a debit balance. Now, in order to rectify this error, we just need to enter the amount on the credit side, right? But we cannot just enter it once, because we have already entered the exact same amount on the debit side, which means that if we enter it once in the credit side, this will just get cancelled out with the amount that we have previously included in the debit side. And in this way, we cannot really reflect the correct amount of purchases ledger control account in our trial balance, which is why we need to record it twice, so that once it gets cancelled out with the previous entry in the debit side, and once it will reflect the correct amount of purchases ledger control account. So the total on the credit side is just 48,300 times 2, which is 96,600. And now in the suspense account, we need to record this amount on the debit side. So that's 96,600. But in the question, we need to figure out the correcting debit entry to the suspense account, which means that we need to figure out the net amount that we need to record on the debit side in the suspense account. So we just need to subtract the amount on the credit side from the amount on the debit side. That is 96,600 minus 960, which is also in the amount of 95,640. This is the correct answer, which is given in option C. Let's move towards the next question. What are the benefits of preparing a bank reconciliation statement? The first one is acts as a deterrent to fraud. This is correct because we compare the amount on our cash book to that of the amount shown by our bank statement, so that there can be less chances of fraud. The second one is identifies out of checks. This is correct as well, because remember that while preparing bank reconciliation statement, we include all of our unpresented checks as well. The third one is prevents the business going into overdraft. This is actually incorrect because the preparation of bank reconciliation statement has nothing to do with the business going into overdraft. Even after preparing bank reconciliation statement, a bank account might have a negative balance. This is incorrect. Then the fourth one is provides the correct bank balance for financial statements. This is correct because preparation of bank reconciliation statement will help identify unpresented checks as well as outstanding receipts or outstanding bankings, which will help us determine the correct bank balance for financial statements. So the correct answer is given by option B. Let's move towards the next question. At the month end, a business bank statement showed a credit balance of 12,697. And remember that a bank statement having a credit balance means that this is a positive balance. And this did not agree with the cash book balance. The following differences were found, and we need to figure out the cash book balance before the necessary corrections were made. So this requires two things. First of all, we need to prepare our bank reconciliation statement from which we can get the cash book balance after the corrections were made, and then we need to prepare our cash book as well so that we can figure out the opening balance of the cash book before all of the corrections. And for the bank reconciliation statement, we'll be starting with the balance given in the bank statement. And if we start with the balance from bank statement, all we need to do in order to figure out the balance as per our cash book, we just need to subtract all of our unpresented checks and add all of our outstanding bankings. Which will give us the balance per cash book. Okay, let's prepare this statement first. We start with 12,697. Let's have a look at our error. A check received 7,170 was entered as 7,710 in the cash book. So remember that this is the error in the cash book itself, which has nothing to do with unpresented checks as well as outstanding bankings, which means that this error, we will have to treat it later in our cash book. And we do not really have to consider this while preparing our bank reconciliation statement. Let's move towards the second one. A check paid in 24,000 had not been cleared by the bank. So obviously this is our outstanding bankings because this was the check paid in which we received, right? These are the receipts, and this has not yet been cleared by the bank, which means that we need to treat it as outstanding bankings. So we'll have to add this amount of 2,400. Then we have a standing order of 450, which was recorded in the cash book, but had not been paid by the bank. So these are the unpresented checks. Because 450, we have already treated it as a payment in our cash book, but in the bank itself, it had not been cleared. So we need to treat it as our unpresented check and subtract this amount of 450. Then the last error is bank interest payable of 642, which had not been entered in the cash book. Again, this is the error which we need to consider in our cash book rather than the bank reconciliation statement. So that is all for bank reconciliation statement. Let's figure out the balance as per our cash book. That is 12,697 plus 2,400 minus 450, which results in the amount of 14,647. Now remember that this is the balance as per cash book after the corrections. But we were asked to figure out the balance before the necessary corrections. Let's prepare our cash book now. Remember that we have the opening balance for cash book on the debit side. That is our opening balance, and this is actually the closing balance because this is the balance after all of our corrections, which will go towards the credit side. So that's 14,647. Now let's consider error 1 and 4. A check received of 7,170 was entered as 7,710. Let's figure out the difference. That's 7,710 minus 7,170, which results in 540. And remember, it should have been 7,170, but we entered it as a higher amount. So this is an overstatement. And in our cash book, we enter all of our receipts on the debit side and all of our payments on the credit side. This is definitely a receipt which was overstated, right? Now, in order to reduce it, we need to enter the exact same amount on the credit side. So that will be 540. That's the error correction of the first one. Let's move towards the fourth one. Bank interest payable of 642 had not been entered in the cash book. So this is interest that we need to pay, which means that we need to treat 642 as a payment, which should again be entered on the credit side. Now let's figure out our opening balance. For that, we first need to figure out the total from the credit side. That's 540 plus 642 plus 14,647, which results in 15,829. And this will act as our opening balance as well. This is the cash book balance before the necessary corrections were made. This amount is given in option D. That's the correct answer. Let's move towards the next question. Which statements identify the advantages of using a purchases ledger control account as part of the accounting system? The first one is compensating errors within the purchases ledger can be found more easily. This is incorrect because we cannot really figure out the compensating errors from our purchases ledger control account. The second one is errors of commission within the purchase ledger will be detected. Again, this is incorrect as well because errors of commission cannot be identified with preparation of purchases ledger control account. Similarly, errors of omission, errors of original entry, and errors of principal cannot be figured out from purchases ledger control account. Then the third one is that the honesty of staff working on the accounts of trade payables is checked. This is correct because remember the trade payables account and purchases ledger control account will be prepared by two different staffs and the balances need to be equal. That is why the honesty of staff can be checked. Then the fourth one is the total amount owing to trade payables can be ascertained quickly. This is correct because the balance that we get from purchases ledger control account will be that of trade payables. So the correct answer is 3 and 4, which is given in option D. Let's move towards the next question. The sales ledger control account of a trader showed a debit balance of 28,500 at the end of the financial period, and this did not agree with the total of the individual trade receivables account in the sales ledger. We are given the following errors. Now, which figure should be used for trade receivables in the financial statements? Since we need to figure out the balance for trade receivables, we can just solve all of these errors in our sales ledger control account. Let's prepare it. We're given the opening balance of 28,500. Now, a dishonored check for 300 from a credit customer had been entered on the credit side of the sales ledger control account. Always remember that the dishonored check should be recorded on the debit side in our sales ledger control account. But this amount of 300 has already been recorded on the credit side, so the correction for this error should be 300 recorded on the debit side once so that it gets cancelled out with the amount previously recorded on the credit side. Then we need to record the same amount again so that it now reflects the amount for dishonored check. Now, for the second error, contrast of 500 entered correctly in the sales ledger had been omitted from the sales ledger control account. And remember that contrast should be recorded on the credit side in case of sales ledger control account. So the correction is just 500 on the credit side. Then discounts allowed of 700 had not been entered in the sales ledger control account. Again, discounts allowed is something that will reduce our trade receivables, so this goes towards the credit side as well. Okay, now we just need to figure out our closing balance. For that, let's figure out the total from our debit side. That's 28,500 plus 300 plus 300, which results in 29,100, which will be the total for credit side as well. And now in order to figure out the balancing figure or our closing balance, we just need to subtract these amounts from the total. That's 29,100 minus 500 minus 700, which results in 27,900. This is the correct answer, which is given in option B. Let's move towards the next question. At the start of the year, on 1st January, a business had an inventory of stationery which had cost 3,740. On that date, 1,200 was owed to suppliers for stationery. Okay, so this is the opening balance. Then during the financial year end, 31st December, a total of 38,800 was paid for stationery. So remember that this is not the purchases, this is the amount that was actually paid. And in order to figure out the purchases, we need to incorporate our opening balance of the amount that was owed to suppliers as well as the closing balance owed to the suppliers. Okay, at the end of the year on 31st December, the business had an inventory of stationery valued at cost 4,200. So this is the closing inventory. This is the opening inventory. Then on that date, 1,800 was owed to suppliers. So this is the closing balance for our trade payables. Let's figure out the amount for purchases. We start with the amount that we have paid in the year, which is 38,800. Out of this, 1,200 was the amount for the previous year, so we just need to subtract it. And then 1,800 worth of goods was already purchased but have not yet been paid for, which needs to be included in our purchases. So we add the 1,800. And this gives the purchases to be 39,400. Now, which figure should be included in the statement of profit or loss for the year ended 31st December for stationery? So we just need to incorporate the opening inventory purchases as well as the closing inventory. So Our formula is just opening inventory plus purchases minus closing inventory. That will be 3,740 plus 39,400. But also remember that we're told some old stationery was sold to staff for 240. So this cannot be included in our inventory now, which means that we need to subtract 240. Then we need to subtract our closing inventory, which is given to be 4,200. This gives the figure to be included in the statement of profit or loss to have the amount of 38,700, which is given in option C. Let's move towards the next question. The following information is extracted from the records of a business for a financial year. Okay, how much will be charged for rent in the statement of profit or loss for the year ended 31st December? Where given the rent paid during the year, we'll start with this amount of 41,000. And at the opening date, we're given the rent paid in advance. So 4,000 was paid already in the previous year, but this amount was for the current year. So we need to include this as our rent. That's plus 4,000. Then we're given the closing balance, which is rent paid in advance, 7,000. Again, 7,000 is paid for in the current year, but this is the rent for next year, which should not be included in the rent for the current year. So we're just going to exclude it by subtracting it. So the total correct amount is just 41,000 plus 4,000 minus 7,000, which is also in 38,000, which is given in option B. Let's move towards the next question. Which items would affect a sole trader's gross profit? So gross profit is just sales minus cost of sales. So we're only going to include the items that will influence sales as well as the cost of sales. The first one is carriage inwards, which we include in cost of sales. So this is correct. Then we have cash discounts allowed. So remember that cash discounts are not recorded. This is incorrect. Then we have commission received. Again, this is incorrect because commission received will be treated as an income, not as sales or cost of sales. Then we have trade discounts received. And trade discounts received is something that we need to record in cost of sales because this will influence our purchases. And purchases are included in cost of sales, which means that eventually this will affect our gross profit. The correct answers are 1 and 4, which is given in option A. Let's move towards the next one. John and Mary are in partnership. After the first year of operation, the current accounts of both partners had a debit balance. And debit balance means that these are the amount owed by the partners to the partnership. What might have caused the debit balances? So we're only looking for those items which requires the partners to pay back to the partnership. The first one is drawings, which is something they definitely need to pay. That's correct. The second one is loss for the year. This is something that they have to bear. This is equivalent to them paying to partnership. So this is also correct. Then we have salaries they are entitled to, which is something that they actually receive from the partnership. So this is incorrect. The correct answers are 1 and 2, which is given in option B. Now, the following information is available for a partnership at the end of the financial year. We need to figure out the profit for the year. We are given the residual loss, total salaries to partners, interest on capital drawings, and interest on drawings. So remember that we start with profit for the year. We simply have to incorporate the format for appropriation account in this. Alright, let's start with total salaries to partners. So this is something that the partnership will have to pay to the partners, which will reduce our profit. So that's minus 5,000. Then we have total interest on capital. Again, this is something that the partnership will have to pay to the partners. So that's minus 27,000. Then we're given total drawings. So we do not actually include total drawings while figuring out our residual profit or loss. So we can just skip this. Then we have total interest on drawings, which the partnership will receive from the partners. So we need to add it to our profit. This results in the residual loss, which is given to be 3,000. So that's negative 3,000. Now we can figure out the profit for the year quite easily. So that's minus 3,000 plus 5,000 plus 27,000 minus 700. This results in the value of 28,300, which is given in option C. Let's move towards the next part. A limited company intends to issue shares at a price above the par value, which means that we have our nominal rate plus a premium rate. Which items apart from the bank balance will be affected by the share issue? So remember that our nominal rate will be recorded as part of our share capital, whereas the premium rate will be included as part of our share premium. So we're looking for this in our answer. For the first part, we have share capital, capital reserves, and revenue reserves. Okay, remember that share premium is a capital reserve because this is being raised by issuance of share, which is not a daily occurrence. right? This is a rare event that is done in order to raise capital. So obviously this is our capital reserve. And we can see that there is no revenue reserve involved in this transaction. So A is incorrect. We have share capital and capital reserves, which is the answer that we're looking for. So B is correct. For C, we're given share capital and revenue reserve, which is incorrect. And D is incorrect as well. Let's move towards the next question. The following information is available for a limited company for a financial year ended on 31st December. All right. We need to figure out the total equity on 31st December after all of the adjustments. Okay, we can start with the equity on 1st January. That's 492,000. We're given profit for the year, which will be added to the equity, because remember that profit for the year will be added to our retained earnings, which is part of the equity. So that's plus 70,500. Then we have dividends paid. Again, this is something that will be deducted from our retained earnings, so we need to subtract it. Then we have dividends proposed. So dividends proposed will not have any effect on our equity because we neither added nor subtract this, so we can just skip it. Then we have a bonus issue of 20,000 ordinary shares of $1 each. So that's the amount of 20,000. But remember that this is bonus issue, which will be funded by the reserves itself. So even if you record this, we just have to add 20,000 to our share capital and subtract the exact same amount from our other reserves. So that will be minus 20,000 as well. So recording it or not recording it does not really affect the balance because it essentially cancels out. Then we have the following decisions. The buildings are to be revalued at 250,000. These had cost 200,000 and the accumulated depreciation was 50,000. So always remember that for revaluation, we have to compare it with the net book value. That will be cost of 200,000 minus the accumulated depreciation of 50,000, which is also 150,000. Okay, so the new value is 250,000, which is greater than 150,000. So this is revaluation upwards, and the amount is 250,000 minus 150,000, which is 100,000. And remember that revaluation upwards will be added in our revaluation reserve, which is a part of equity as well. So we have to add this amount of 100,000. Then we have transfer of 5,000 to the general reserve. Again, this will be similar to our bonus issue because we have to add 5,000 to the general reserve, but the exact same 5,000 will be reduced from our retained earnings as well. So recording or not recording it does not really affect the balance on our equity. So the total balance is just going to be 492,000 plus 70,500 minus 24,000 plus 100,000, which results in 638,500. This is the correct answer, which is given in option D. Let's move towards the next one. A business has a rate of inventory turnover of 17 times. So rate of inventory turnover is just cost of goods sold divided by average inventory. Now, what is the numerator in the calculation? So the numerator is cost of goods sold, which is our cost of sales, given in option C. Let's move towards the next one. The year-end statement of financial position of X Limited at 31st December shows the following. We are given profit from operations as well as the finance costs. We need to figure out the return on capital employed. So the formula for return on capital employed is profit from operations divided by capital employed times 100%. We are given the profit from operations to be 65,000. Let's figure out the capital employed. So capital employed is equity plus non-current liabilities. We have non-current assets, we do not include it. We have current assets, we don't include it. We have ordinary share capital, which is part of equity, so that's 900,000. Then we have general reserve, which is again a part of equity, so that's plus 150,000. We have long-term loan, which is part of non-current liabilities, so that's plus 200,000. We have current liabilities, we do not include this. We have retained earnings, which is again a part of equity, so that's plus 150,000. Now this gives the total of capital employed to be 1,400,000. That's our denominator. Times 100%. This results in our return on capital employed to have the value of 4.64%. This is given in option B. Let's move towards the next part. Which statement is correct? So the first one is direct costs change in direct proportion to changes in levels of activity. So remember that direct costs are our variable costs, such as our direct materials and direct labor, which will definitely change in direct proportion because this will increase as the unit of our production increases. So option A is correct. Let's have a look at the remaining options as well. Fixed costs remain as a constant proportion of total cost when output changes. This is not correct because fixed costs will remain as a constant but not constant proportion. Then we have semi-variable costs increase in direct proportion. This is also incorrect because semi-variable means that part of it will be variable, which will increase in direct proportion to an increase in production, but part of it will be fixed. So the entire semi-variable cost cannot increase in direct proportion. Then we have stepped costs, which will increase in direct proportion. Again, this is incorrect because stepped cost will remain the same for a certain level of production. Let's move towards the next question. A manufacturer operates a bonus system. He provides the following information. We are given the output required from each worker. We are given the time allowed to complete output. We are given the actual time worked by Fred. Now, a bonus is paid of 25% of the direct labor cost for time saved in addition to the hourly rate of 8.75. So we can see that the time allowed was 10.5 hours, but actual time worked by Fred is 7 hours. So the hours saved is just going to be the difference. So that's 10.5 minus 7, which results in 3.5. All right. Now we need to figure out what did Fred earn from his output of 175 units. So he only worked for 7 hours. He'll get the hourly rate of 8.75 for that. Right? But for the remaining 3.5 hours, he will get 25% of the labor cost because that's the bonus. So that will be plus 3.5 times our hourly rate of 8.75, but he'll only get 25% of this. So we just multiply it by 0.25. And this gives the total earnings for Fred to have the value of 68.91, which is given in option A. Let's move towards the next part. A job cost sheet showed the following estimates. We're given material, labor, overheads, profit, price of job, and the job actually took 25% more labor hours than were estimated. Okay, so this is the labor at 20 per hour. So we're told that for 1 hour, the labor rate is 20. But we're given the total of 200 as our labor. So for 20, that's 1 hour. For 1, that will be 1 by 20 hour, and we're given 200. So that will be 200 by 20. So the total labor hours will just be 10. But now we're told that it actually took 25% more labor hours. We need to increase this by 25%. So labor hours will just be 10 times, we're just increasing it by 25%. So we can multiply it by 1 plus 25%, which results in the new number of labor hours to be 12.5. All right. Now, according to this, our total labor will also change. Right? Now the new labor will be the number of hours multiplied by the hourly rate of 20, which results in the value of 250. And we can also see that overheads are based on labor hours as well. So this will change too. The rate is 10 and the number of hours is 12.5 multiplied by 10. This results in the new overheads to be 125. Okay, now we need to figure out the new profit. We are given the price of job, that is basically the revenue. So we start with that amount and we subtract all of our costs. We start with materials, that's 680. Then we subtract the labor, which is 250. Then we subtract our overhead, which is 125. Now this gives our new profit to be 205, which is given in option A. Let's move towards the next one. What is the most suitable basis to apportion power costs between two production centers? So power cost is definitely used to operate our machines. So we need to consider this. The first one is capital cost of machinery, which is not associated with the operation charges of machinery. This is incorrect. Then we have maintenance cost of machinery, which is again not really associated with the operations of machines. Then we have number of employees, which does not relate to machines at all. And the final one is number of units produced. This definitely relates to the operations of machine because the number of units produced will be based on the number of hours for which we operate the machines, right? So the suitable basis will be number of units produced. That's the correct answer. Let's move towards the next question. A manufacturing business makes a single type of product. It has two production departments, machining and assembly, and a maintenance department provides services to the production departments. Budgeted figures for these departments are shown. All right, we're given the overheads as well as the production units, and the business uses a cost per unit rate to absorb overheads. Maintenance department overheads are transferred to production departments in proportion to output. All right, we're given the output right here. That's the production units. Then which figures are correct for the machining department? We only need to figure out the total overheads for machining department and then figure out the cost per unit as well. All right, so we start with the overhead of 800,000. Then we need to reapportion the amount from maintenance towards machining and assembly. And remember that this is transferred to production department in proportion to output, which is our production units. So we need to figure out the total first. That is 200,000 plus 50,000, which results in 250,000. And for machining department, we start with the total amount for maintenance, that's 300,000. And we just use the fraction because out of total of 250,000 units, only 200,000 will be for machining department. So that's 200,000 divided by 250,000. This results in the reapportioned amount towards machining department to have the value of 240,000. So we have to add it in order to figure out the total overhead for machining department. So that's 800,000 plus 240,000, which results in 1,040,000. Now we also need to figure out the cost per unit. For that, we just need to divide the total overhead by our number of units. And for machining department, that's given to be 200,000. So that's 1,040,000 divided by the production units of 200,000, which results in 5.2. So we're looking for 1,400,000, which is given in C and D, and 5.2, which is given in D. That will be our correct answer. Let's move towards the next one. The following data applies to the budget for a job. We're given direct materials, direct labor, machine hours. Direct labor is employed at an hourly rate of 11. So we're given the total labor to be 2,200, and we're told that 11 is for 1 hour. Let's figure out the number of total hours. For 1, that will be 1 by 11 hour, and we're given the total amount to be 2,200. So the number of hours will be 2,200 divided by 11, which results in 200 hours. And now we're also told that the production overheads are charged at 25 per direct labor hour. We already have the total direct labor hour right here, and an amount for selling and distribution overhead is calculated at 20% of factory cost. So remember that we first need to figure out the factory cost. Let's create a statement. We start with direct materials, that's 4,800. We have direct labor, that's 2,200. And we also have production overheads. Now remember that these are the overheads that will have to be incurred in the production process itself, which will be part of the factory cost. So that's 25 per direct labor hour, and we have the total direct labor hour to be 200. So the total production overhead is 200 multiplied by 25, which results in 5,000. Okay, these are all of the costs directly involved in the production process. So the total will be our factory cost. That's 4,800 plus 2,200 plus 5,000, which results in 12,000. And we also need to include the amount for selling and distribution overhead, which is 20% of the factory cost. This is the factory cost. Let's figure out its 20%. So that's 12,000 times 20%, which results in value of 2,400. We need to add this, and the total will be the required total cost of the job. That's 12,000 plus 2,400, which results in 14,400, which is given in option C. Let's move towards the next part. A company has 2 production departments, manufacturing and assembly, and a store service department. The overheads are apportioned to each department using the appropriate costing information supplied. Alright, we are given the direct labor hours, machine hours, total cost of the stores department, as well as the number of stores requisition. We need to figure out the overhead absorption rates for the 2 production departments in respect of the stores. So what we need to do is we need to apportion this total cost of stores department to both manufacturing and assembly department, and then figure out its overhead absorption rate. Let's reapportion it. So the number of store requisitions will be our basis for reapportionment. Let's figure out its total. That's 3,000 plus 2,000, which results in 5,000. Okay, so for manufacturing, we start with the total amount of 32,800. Again, out of the total of 5,000, only 3,000 store requisitions is for manufacturing department. So that's 3,000 out of the total of 5,000. This results in the amount of 19,680. That's for manufacturing. We repeat the same process for assembly. We start with a total of 32,800, and out of 5,000, only 2,000 is for assembly department. This results in the reapportioned amount to be 13,120. Now we need to figure out the overhead absorption rate for these amounts. Okay, let's figure out our basis. So the basis will be higher of direct labor hours and machine hours. For manufacturing department, we can see that it should be machine hours. For assembly department, it should be direct labor hours. Let's figure out the overhead absorption rate. For manufacturing, we start with the total overhead of 19,680 divided by our basis of 20,160. This results in the amount of 0.98. And remember that our basis is machine hour. This is given in option D. Let's figure it out for assembly department as well. That's 13,120 divided by the basis of 33,600, which results in the amount of 0.39. And remember that our basis is direct labor hours, which is given in option D. That's the correct answer. Let's move towards the next question. What does an increase in the marginal cost of a product cause? So the marginal cost is just the additional cost incurred while producing one extra output. So we can just term it as our variable cost. We're looking for the cause of increment in the variable cost. Let's have a look at our options. So the first one is decreased contribution. So remember that the formula for contribution is sales minus variable cost. So if this has to decrease, then either our sales revenue will have to decrease or our variable cost will have to increase. And the criteria that we're looking for is the increment in variable cost, which is given in option A itself. But let's have a look at the remaining options as well. We have decreased fixed cost. So remember that fixed cost has nothing to do with marginal cost because marginal cost is only associated with variable cost. This is incorrect. Then we have increased contribution. Again, we just concluded that decreased contribution is the correct one. But if we were looking for increased contribution, that would have been either for increased sales or for decreased variable cost, which is the opposite of what we're looking for. Then we have increased contribution to sales ratio. Again, that is the increase in contribution divided by increase in sales, which is the criteria for decreased variable cost. So that's incorrect as well. Let's move towards our next question. Which statements describe the usefulness of cost volume profit analysis? So the first one is to see the relationship between cost and revenue at different levels of activity, which is correct because cost volume profit analysis basically analyzes the incurred cost and the revenue that we can earn at different level of outputs. Then the second one is to set the selling price of a product to achieve targeted profit. This is true as well because as the name suggests, we are analyzing our profit as well. We're figuring out the optimum amount at which we can gain as much profit as possible. Then the third one is to set the selling prices for a variety of products. So this is actually incorrect because cost volume profit analysis has to be performed for each different product. So we cannot really analyze the cost, volume, and profit of various ranges of outputs at once. This is incorrect. So the correct answers are 1 and 2, which is given in option B. This concludes this paper. If you found this video useful, make sure you like the video and leave a comment below, and make sure you subscribe to the channel so that you do not miss any of these videos in the future. Thank you.